Invite our first guest on the show now. We have Varun Goel of Nippon India AIF who joins in to discuss the markets, his top sectoral bets and the way forward. Varun, welcome to the show and thanks for being with us. I have to start by asking you about a lot of these platform companies that are under intense pressure right now, not just Nykaa, which of course has a resignation of its CTO as well, but other names, whether it's Delivery, Paytm, PB Fintech, all sitting at fresh lows this morning. What do you do here? There is the pre-IPO lock-in that ends on the 10th of November as well. Do you exit these names if you hold them, or do you look for some opportunities here?
Good morning, Sonia. Thanks for having me on the show. I think the profitless tech theme is something which got significantly overrated across the world. And I think what we are seeing as the cost of money is becoming higher, as the capital is becoming tighter. A lot of these names are getting derated. We thankfully stayed away from this throughout last year and this year too. And we hope that the valuations will soon come to an area where markets will value them based on profits and not just on future growth potential. So there is no doubt that there is a lot of growth in digital companies. The next 5, 10, 15 years, we will see a lot of these companies getting bigger. But one has to focus on profitability, ROEs, and respect for shareholder capital. And once we see value emerging there, we would definitely look at investing in these names. So far, we have stayed away.
All right, so far you've stayed away from these platform companies. Varun, good morning. Thanks for joining us. This is Pavitra. What about the old school tech companies? I mean, of course, they have corrected significantly from the top, but valuations have corrected and it could, prove to be a good entry point. Do you think that it's a good idea to take some positions in the IT names, or do you think that there is more of a fall coming?
Good morning, Pavitra. I think the traditional Indian IT companies should see a strong earnings growth in the next 2 to 3 years. Valuations have corrected by 30, 40, 50% depending on the name. I think as far as the whole shift to cloud and the digital, be it US manufacturing, telecom, financial services, that trend continues across the world. Europe, of course, is seeing some cross-currency headwinds, but overall we see a 10 to 15% top-line growth outlook. The biggest problem for Indian tech was more on the margins, which was led by attrition. Thanks to the slowdown in the growth environment, we are seeing some of that problems also getting resolved. Combined with almost a 10-12% depreciation in rupee, I think even the margin headwinds should get addressed. So we believe for most large cap companies and select mid cap companies, the valuations are much more palatable now. And if one were to take a 2 to 3 year view, this sector is definitely worth investing with a 10 to 15% top line, bottom line growth, and 15 to 20% kind of 1 year forward PE. So this remains one of the top sectoral choice for us.
Hi, Varun. Morning. Since the focus is on bottom-up stock picking, from the earnings universe, which have been the big hits or misses from the set of stocks that you all track?
I think the biggest, the positive surprise in this earnings has been the banking sector, especially the mid-cap banking space. I think for the first time since 2013, we are seeing a double-digit credit growth, which seems to be sustaining. For the most mid-tier private banks, NBFCs, we have seen very strong commentary. They are talking about 15 to 20% credit growth, and that is why you see most, mid-tier public sector banks and the private sector banks and NBFCs getting significantly re-rated. Most of them have done quite well in the last few months. Our sense is, even if the credit growth were to slow down slightly from the 15-16% that we have now to 13-14%, most of these names, the large cap ones and the mid cap ones, should continue to see very, very strong earnings growth. The top line growth, of course, is there. The asset quality of the banking system as a whole is quite good. We don't see a significant acceleration in NPA cycle just yet. So we might have a 2 to 3 year strong period for large cap banks and, of course, for the select mid-cap private banks and NBFCs. So that has been the star performer of this earnings season for us.
Okay, the star performer undoubtedly, right? The other space that you like, Varun, is the real estate sector. But if you map the trajectory this year, right, of most of these big real estate guys, they've not done much. I mean, Oberoi Realty, for example, is up about 3% this year. DLF is down 2%. Prestige is down about 6%. So while they're selling a record number of homes, the stocks have not done much. Your views here?
So I think the biggest thing which makes us positive on the residential real estate space is that one post-FERA, most of these companies have seen significant improvement in corporate governance. In fact, at the first time, in 15, 16 years, we have started taking a very bullish view on real estate in the last 1.5 years. Second is, I think if you look at affordability, in 2013, your EMI to take home salary ratio, which is if your salary was 1 lakh rupees, you were paying 50,000 for EMIs. Today, that number has come down to 35,000. So your loan to EMI to take home salary ratio is down to 35% despite the increase in interest rates. So affordability has gone up, salaries have gone up. We have seen 8-9 years of poor real estate cycle. So now we think things will definitely catch up. Now, before demon, interest rates were where they are today. Mortgage rates were at 8.5-9% before demonetization, and we are back at that level. So our sense is the end user demand will be there. We will see a 5 to 10% increase in prices. We are seeing a very, very strong volume growth. So while yes, this year residential real estate stocks have been underperformer, that is primarily on the back of very, very strong performance the year before. Our sense is if we were to take a 2 to 3 year view, we should see significant growth both in pricing and volume, and we remain quite bullish on the sector as a whole.
All right, quite bullish on real estate. The other space that I can see you like is the auto space. A lot of these stocks have already rallied quite a bit, right? So do you think that these still are, good to get into at these levels as well? And then within the auto space, what do you like? Do you look at the two-wheelers, the, passenger vehicles? Would you play the EV theme? How do you approach the sector?
So we would avoid the two-wheeler space. I think that's where we will see the largest disruption. We like the tractor space and the CV space. I think that's where the largest value will get created. We are seeing already early signs of the tractor cycle turning into positive. We have seen a good festive season. The passenger car space, especially those companies which are geared towards the EV space, should see good earnings growth. We also like some of the select auto ancillary plays, which are more immune from disruption from the EV side. So that's the space that we would focus on.
Okay, so that's on the EV side. Of course, some of these players like M&M have done exceptionally well. So what do you do with names like this, Varun? Because, on one hand, of course, growth is there. But on the other hand, these stocks have rallied so much. You think it's too late to enter now for some of these names like M&M?
Well, I think, if you look at the auto sector as a whole, 2019 was the year when the space, peaked out in terms of volumes. We are seeing a gradual recovery. So our sense is the recovery will be more gradual, especially in light of what we are seeing in the rural India, where recovery is more muted, while urban India has bounced back very, very strongly from the post-COVID situation. That is why we like passenger vehicles more as compared to some of the two-wheeler focused stories. Having said that, we hope that in the next 6 months, even the rural India will catch up. So we will remain selective. I think a big re-rating for the auto space is already done. From here onwards, it will be more, bottom-up stock picking wherever earnings growth sustains, and tractor stories and select passenger vehicle stories and CV stories. That is, where we would be focusing on.
All right, we got that. Varun, thanks a lot for joining us and taking us through your call on the market. You like the banks, you like real estate, you like even some IT names as well as the auto pack. But for that, we're going to get into